market live stream. Not only do we have the last massive data point out just before the Fed decides tomorrow, we also have Wall Street's lowdown. What's the right word here? Of why they're saying beware, be very, very beware. And then I'm going to round you off with some silver lining, because there is some good news on the horizon as well. And I want you to understand the whole thing as a package so you can make better decisions in this September, October, November, December till the end of the year, and be also thoroughly prepared to what Papa Powell is going to throw at us tomorrow. So smash the you-know-what and let's get started here. I'm a bit cut off today, aren't I? It's like I grew overnight or something. No, I moved my camera about a bit, which is obviously didn't quite put it back into the original position. So, good morning all. Is it live yet? I'm not hearing anything. Yes. If you can see me and see me waving and that sort of thing, then that's typically a good sign. So what have we just got out? We just got out retail sales data month on month. And as we're looking at that and digesting that, I need to digest some electrolytes. That's usually my time of the day to get my fill of salt, basically. Isn't that what it is? It's basically salt, isn't it? Potassium, calcium, magnesium, zinc, trace minerals, no sugar, no stevia, nothing else. There's some product placement there for you. No, I don't sell salt. But what were we expecting? Can you see that? We're expecting the number to be negative. We thought, not we, the economists who are paid a fortune by Wall Street thought in their infinite wisdom that we would have lower retail sales data. But we actually came out with higher sales data. Now, you could say, that's good. The US consumer is strong like an ox. That's brilliant, right? Yes and no, because if the US consumer is so strong, doesn't that mean we need less rate cuts? Because the consumer is so strong? It's an argument, isn't it? So it's not massively higher. I mean, 0.1% is significant, but it's not like it came in, at 1% or something like that. So I don't think it matters that much. If I looked at the stock charts, which I just did, I don't think the market is freaking out over it. Let me look on a minute chart again. Give the bankers a few minutes to digest it. Came out here at 8:30. There, whoops. What is the shortcut? That's it, isn't it? Yeah, there. So we didn't really do much. A lot of trading volume, but not a lot of action here. So the markets is okay with it, and that's all right. So we can move on to our doom and gloom story, and then also to how we make money. And of course, if you want to learn how we make money and how we are literally up, this here represents a 93% upside so far this year. Curious how we do that? Come and join me literally today at 8 p.m. New York time at felixprehn.com/bootcamp. It's completely free of charge. I will talk at you for about an hour and a half, and I will teach you our 3-step system, including the rules, how we get into it, when we get out of it, how we automate, pretty much the whole thing. And you walk away with that knowledge, because my goal here is to make you actually financially free. So I showed some of you this chart yesterday. Andres, don't get us started on vegetables again. Someone messaged me yesterday saying, what's with all the vegetables, Felix? So September, the second half of September is typically terrible, right? And that's important to bear in mind. But remember this chart. We're going to come back to this in a moment. There is a story to weave here that goes beyond that. Now, let me give you the doom and the gloom first. Algo funds, our lovely CTA computer friends. In the future, all your friends will be computers. There'll be the kind robot that you can buy and the not so kind robot, depending on how you feel. And they're basically, if the market goes flat this week, they're going to sell. If the market goes down this week, they're going to sell 30 billion. Yeah, there is a little bit of, if the market goes up, they're going to buy a little bit, but the downside risk is much greater. And then over the next month, in a flat market, they buy, great. If we go up, they do buy. But the kicker, of course, is if we go down, they're going to sell 140 billion. That's pretty horrific, isn't it? So they're going to sell a heck of a lot more than, and on the S&P, In an up tape, they buy only 5 billion. In a down tape, they sell 36 billion. So the risk here seems to be skewed towards the downside, which is why Wall Street's saying what Wall Street's saying, right? Let's go carrots. Don't get Winston. I just went in the kitchen and there was Winston's head in the fridge with my lovely housekeeper. And I was like, why is Winston's head in the fridge? And then I could hear him crunching on things. So I knew he gets lots of little snacks out of that vegetable drawer. There we are, back on the vegetables. Okay, there is good news though. You know, I was saying that they're going to sell like lots of money, just right. Well, the pivot levels are pretty sweet. So we're trading right now on the S&P at 5633. So in the short term, so like this week, we would need to drop below 5,526, which is really, really quite low. Down, we go on a day chart here. 5,500, basically that would be the this week line. And then for medium term, sort of a month out, 5,358, 5,358, somewhere there. And you can type them in. So what does that mean? It basically means we need to drop quite a bit. By quite a bit, I mean we need to drop about 2% or so they start selling this week. And they need to drop, for the selling to continue, the market would need to drop almost 5% over the month for the selling to continue. So we have a bit of a sweet buffer zone here, which means might not be as bad as we feared, right? Winston's going to get a robot from Elon that can open the fridge. Well, he's already got two lovely ladies who do exactly that for him, and it's hard to say no when those eyes look at you. Okay, this is I'm going to say from Goldman Sachs, and they're adding to this, and I think this is important to understand. Remember we were saying about a month ago, like, why is September so bad? Well, this actually answers the question because they break it down for us quite nicely. The first is mutual funds do their tax loss harvesting around September and October. Corporates pay taxes in mid-September, so that's bad. I should probably make these crosses, right? More dramatic, bad. The corporate buyback window goes into this blackout phase. I'll show you a chart on that in a second. And that happens in mid-September, where we are right now. So that's bad. And then the bank regulatory capital window dressing happens also in September. So basically in September, the banks know that they're going to have to dress up their balance sheet. So they do that and therefore pull a little bit of capital out of the market. So that's bad. And then you lot out there, you Americans, mid-October, individual tax payments kick in. That's also negative, right? And then the Canadians, the moose up north, are going through the same thing with their banks that the American banks are going through. And they are, as Wall Street puts it politely, not an inconsequential player. They don't want to give too much credit to the Canadians. So that's it. And there's a lot of data here today. It's a lot of data. It's one of these like data-laden mornings. Yes, I know the camera is cutting me off. It is. It's doing that, and it's because I put the camera too low. So if I do this, yes. So there is a head up there somewhere, but it's doing it even on this, you see. So I haven't grown overnight, although it's possible. What the heck does this mean? We're dealer gamma out 6 months. What? Well, okay, in a nutshell, and I aim to always simplify. Below 5,600, things go very, very bad, okay? And then you have this sort of zone here, and I don't know exactly where that sits, but I would say about 5,650 to 5,700. It's hard to break out over that, so that's also bad. And then above that, above 5,700, you get into this territory here, which is happy. Okay. So basically, we go down, there is more selling. We go up a little bit, there is more selling. But if the Fed delivers tomorrow, everything, fries and shakes and the whole lot, and the market really goes roaring through the 5,700, then we're going to see a nice rally. But anywhere in between, we're kind of stuck, okay? Or we're going down. And here is the lovely little chart for blackouts. And essentially what that's saying that about 55% of the S&P is now not buying their own shares because earnings season's coming up. And by the end of September, you know, I always struggle with whether the 9th month is September or October. It says a lot, doesn't it? By the end of September, there are basically no buybacks happening. So therefore, October doesn't look that happy either. All the supplements made me grow. Indeed, that must be it. It must be the electrolytes. Lawrence, thanks very much for the like. Okay, so there we are, right? So now we know some of the bad news. So if the Fed decides to disappoint us tomorrow, then things are looking fairly bad, right? We've got the Algo funds selling, we've got the market makers selling, we've got liquidity being tight for all the various reasons we illustrated. So none of that looks particularly happy. So what am I doing? I'm doing absolutely bugger all. I'm doing nothing at all. I'm going to wait, sit on my hands like a good trader should in scenarios like this. And then you're going to ask me, but Felix, what happens after that? What about next? What happens next? What happens next? So what happens when the Fed starts cutting rates? So here is the beautiful chart that we've got. And this is the rate cut number 1. Okay, it happens here. That's the first rate cut. And this is historic data going out, I don't know how many years. And what happens? Well, if we don't get a recession, so no recession, then 12 months later, so 12 months later, we are up about 15% on the S&P historically. Now, if we do get a recession, guess what? 12 months later, you get the idea, we go down 15%. So it's kind of a bit of a coin toss thing, isn't it? Now, Wall Street doesn't think we're going to get a recession. And I'm with them on that. Not because we don't deserve a recession. I think we do. I think there's plenty of rubbish out there that deserves to go bankrupt. But in terms of companies, not individuals, obviously. But the US government is spending so much money, it's almost impossible to get a recession. There's so much money gushing about. And the whole world is cutting rates, which is going to create some sort of stimulus everywhere. So therefore, it's fairly unlikely. How tall am I? I think I'm about 6'1". I think that's about it, which is, I don't know, 185 or 6 or something like that for you, you know, metric people out there. But apparently I've grown out of the screen today, and we will try to address that by hammering myself with a large hammer overnight and see if that has an impact. Alternative would be to change the camera position, but that seems a little mad, doesn't it? So what comes after September? Well, let me show you what comes after September, because there is October, first half of October. That's a glorious, it's not much of an arrow, it's a bit of a big pen. This here is the first half of October. This next one is second half of December. And these two represent November. Do you get the picture? November and December, and some might argue October, are brilliant. Why do I put the October thing in square brackets, as I'm about to? Because it doesn't turn out very positively if there is an election. So if you lot keep on insisting on elections, your Octobers typically don't look very good every 4 years. So I'd be less excited about October, but I'd be very excited about November and December. And that's how we make money, partially. Seriously, partially understanding just the market patterns and seeing them for what they are and looking at them every year and going, yeah, I know it's September is not a good month. October is probably going to be dicey. So why are we not going to be a bit more cautious? Take some more profits, buy some of the dips, that sort of thing. And that's exactly part of the reason why we're up 93% so far this year. So if you want to learn how we've done that, literally that little blip there represents that. This is the year so far on our teaching portfolio. Then come and join me. today in literally 12 hours at felixprehn.org/bootcamp. And I'll teach you for about an hour and a half the 3 steps that get us here, because it's literally just that, 3 steps, and then we automate it and we rinse and repeat. So it's for beginners. You don't need to know a thing. Just come and join me. Sign up at felixprehn.org/bootcamp. But I promised you positivity, didn't I? It almost feels like, doesn't it feel almost like we're going into Christmas season? It almost feels like we're going into Christmas season on my end. We are here, as the French say, and you'd expect us, therefore, to tank a little bit. And then historically, at least, we recover very nicely in November and December. As I say, I'm dubious about the month of October because of the elections. And then November, December should look very, very, very sweet. And here is another one with the election day. And what do you see in blue? And in blue, again, this marvelous steward of colors who makes these charts. In a presidential election, which is the lower chart here, we tend to get a glorious rally in November, December. Without a presidential election, we also get a rather glorious rally, but we tend to do a little bit better in non-presidential election years, so we don't have to worry quite as much about what the Muppets in Washington are going to do or change and so on. So, of course, for those of you who are expecting civil war, well, none of this really matters very much, does it? So there we are. The pre-market is looking decent. Apple's still reeling a little, but Nvidia, Google, Microsoft, Meta rebounding somewhat, Amazon up 1%, Tesla up almost a percentage point now. Financials continue to outperform, which is what we were expecting. And things are not too bad, right? Not too shabby. Tyler thinks the market won't crash today. It won't crash ever. Well, it'll crash at some point. Pretty much very, very regularly, it crashes about 30%. So you'd have to just, look at that. Farouk, you want GEX on Options Watch? Yeah, it's a thought. It's a thought. We're working on something like that, Farouk. Microsoft buyback announcement, indeedly dawdly. The Microsoft has said that they're going to buy back quite a lot of money. But what, $60 billion, right? Is it? Where is it? Where is it? Seen it somewhere. Microsoft. Anyway, let's have a look at how the stock's faring. There wasn't a lot of movement on it, to be honest with you. The market's kind of going, yeah, we don't know that bothered. And there's a bit of a jump up. We've gone up $7, which is better than a kick in the teeth. Not a massive jump, but a bit of a jump nonetheless. Is that the breakout we're looking for? Possibly. It takes us about halfway through the resistance zone, which is what this box here indicates. How do we come up with that nonsense? We look at market positioning. Massive market positioning at 445, which makes it very hard to break through. So trading at 438, I'd like it to trade at 446. Then I'd be interested, really. SoFi looks good, says Crostis. Where are you from, Crostis? Costis, even. It's an unusual name. Where is that from? Trading above 8 pre-market. Yes, very nice. It looks like we might get a gap up. 8 is the end of La Resistance. And if we close significantly above 8, we might actually take it out. I would say 819 isn't significantly above 8 yet, but it certainly has us feeling more positive. The previous high here was at about 822, that one there, right? So we want to knock that one out of the park. SoFi is going to make us all rich in the next 12 months. I hope so. I think rate cuts should be very good for it. Could you look at Palantir? Yeah, somebody asked me that yesterday, actually, one of my students. I'm going to say the same thing to you I said to him. Can't give you specific financial advice because that would be illegal. Now, chart looks very optimistic. There's one thing I look at with rallies, though, and that's what's the distance between where we are right now and the 50-day moving average line. And that's quite a big distance, right? And the last time we were at such a distance, No, not there. What about, it was here actually, you see, when we topped out in March. So I'm not saying we have to top out, but I'm just saying I think quite a lot of the rally is kind of in there. So I think maybe sign up to Trade Vision, which is the software that I'm using here. And then you would have gotten that buy alert on the 6th of August by email. And that would have been a much, much better entry point at $26 rather than at 37. So the markets moved in a little bit here at 38. That wasn't there yesterday. We were at 40 yesterday. So the market also seeing some resistance here at 37. So I am a little cautious short term, at least here. Stan says, are these little bars here is open interest? Exactly. So if you strikes it, explains it to you there at the top. You could show volume, but open interest is more interesting. And big green lines will basically reflect some form of resistance. Big red lines, some sort of form of support. So quite useful to understand that. Uncle Roman, how do you determine to take profits? I'd look at the chart, to be honest with you. I would honestly look at the chart. And as I say, one factor here might just be, are we really pulling away from the 50-day? And if I'd gotten in here, which I didn't, because I didn't trade it, then, and I was still in it up here, I would personally, and this is not financial advice, probably take at least partial profits, because a $10, $11 move is pretty significant, and you could therefore massively reduce your risk. And then I'd set up some sort of trailing stop, probably here, which would be the high here and the beginning of that gap up, something like that. Which also happens to be the 20-day moving average. That's probably what I would look at. So yeah, obviously you want to write out some rules. That's what you want to have. You want to have some black and white rules that you always stick to. That's really the way I would look at it. Christian, how do I get my buy alert emails? Are you a premium member, my friend, or you are one of the freeloaders? You need to be on a premium account to get that. So check into your account and see if you can upgrade. Otherwise, if you don't get it for some strange reason, there is in the bottom right a little support chat thing, and you can send us a message. What about Dell? We're gonna have a look at Dell. I was quite optimistic on Dell earlier this year. I still am somewhat, but they've so far rather disappointed, haven't they? We need to see them deliver. The story is there. We still haven't seen the numbers. Gap up here this morning, which takes us to this high here, which is quite nice. But I am cautious of buying things on really, really rapidly falling moving average lines like this one here. So I would still be a little cautious. We're below the 150, so take us back to 120, 121, and I think we'll talk. Christian, you're premium. Okay, first of all, have a look, obviously, in your spam filters, if you see it in there. And if you don't, drop us a message through the support chat thing and then the bottom right, and we'll see what the heck happened to your emails. Dell made a big deal yesterday. Yeah. Intel also, right? No, was it? No, I think it was. I was thinking of Intel. Yeah, I was thinking of Intel. Intel got that Amazon deal and also Department of Defense deal, which goes to show the government will always give money to the dumbest company around. They're just not very good at spending money, aren't they? But yeah, trading up a little bit here, not massively, but somewhat. 4.8% up after 6.3% up yesterday. Sounds like a lot, but look at the chart here. We haven't even left the zone of misery, which we still need to get back to $25 at least to really, really start taking this stock seriously. PM, yeah, I was just thinking the same thought there. Chill Zone, I've been a member since the price was $16. It still is for the year. Will I still get that price if I renew the subscription? Chill Zones, you mean you've cancelled and you resubscribe, you basically come in at whatever the price happens to be right now. But it's $16 for the year per month, or 19, I think, per month, something like that. 10% trading stop loss, good general rule of thumb. I'm not necessarily for stocks. I'm not a huge fan of the percentage number, to be honest with you, because 10% is pretty generous. So if something's up 20% or something's at 10%, it's probably better than nothing. I would probably prefer to look at the chart and set something up that's kind of logical. But failing there being any support, then maybe that's a reasonable thing to do. Will you have an app for Trade Vision soon? Soonish, yes. It's being worked on. It's being worked on as we speak. We're actually today, bit of a relaunch today, hopefully, or tomorrow, and then the app's definitely one of the things we are working on. Also, trade tracking is one of the things we're working on, and a bunch of other stuff. Like there's a whole long list of things that will make this app better and better, and just give you more and more data points, which is really what we want for you. Now, what are the buy alerts emails, says Tim? Basically, we'll send you an email where you get, I can show you one if you like, where you, let me find one. So twice a day, I look pretty much only at the end of day ones, to be honest, but we get an email like this. And it basically just tells you like what were the breakout stocks that day, what were the bearish ones. So that's like what did we go bullish and bearish on essentially on that day. And that's automatic. That's done by our AI model, which basically reads the charts, and it reads about 2,500 charts. So it's quite useful. So when the November rally begins, will small or large caps be better? My crystal ball says, I don't know, to be honest with you. I think it depends on the economy. I think a softer economy is better for large caps, or at least less bad for large caps. A really soft economy is worse for small caps. They're just more affected. Tallulah had a lot to say yesterday. She always does. She's a very talkative little creature. I hope you add that pre-market map thing in Trade Vision also. Yeah, that's kind of on the list. I was thinking of, could we do something like that with the indicator to make it more visual across the market or something? But yeah, heat maps are it's quite a nice snapshot, isn't it? To see what's going on per sector, particularly. Dan Robbins, very optimistically, just put in war and 3 exclamations. Dan, I would love to know what's going on in your mind. And in the mind of the other 900 people who haven't hit the like button yet, which should be a crime, shouldn't it? Should be a crime punishable by, I don't know, flogging on YouTube. Yeah, the story today is basically retail sales are looking better than expected, which is, well, it keeps the soft landing miracle alive, but it also removes a little bit of urgency from the Fed to cut hard tomorrow. And we'd rather they cut hard tomorrow than just a little bit. So if you have any questions, my friends, put them in the chat. That's what we do this live for. Otherwise, this is where we are at. And I'd encourage you to come and join me literally today for our bootcamp, where I will teach you this little feat here. How we have turned $30,000. We started with $30,000 in our teaching portfolio, and we've turned it into $58,000 so far this year. If you'd like to know how we do that and what the actual rules are behind that, so how do we find the trade, how do we set it up, how do we automate the profit taking and the risk management, then come and join me in literally, 11 hours at 8 p.m. Eastern time at felixprehn.org/bootcamp, and I'll walk you through it. Are you ever concerned with the dollar weakening from a conversion rate perspective? Not really. No, I don't think it makes a huge difference, to be honest with you. I think if you have good stocks or you have good trades, whether or not the dollar is up or down 2 or 3 or 4 or 5% doesn't really make much difference. The benefit of being in the biggest stock market in the world far, far outweighs it, in my humble opinion. QQQ today. Let's have a look at the chart, shall we? QQQ looking pretty happy, 3/4 of a point up today. Now, do note the highs. So we're kind of at an important point here, right, in that downtrend. We want to significantly break out of that. We don't want that just to be a little blip and then go lower again. So moving averages are coming down. The market's getting a bit more cautious. The one thing that's going to decide all of that is Papa Powell tomorrow at 2 p.m. Eastern time. So that's obviously the one event we're all watching out for to see what the heck's going to happen there. And of course, we'll cover that to make it explainable. MOH, that's MOH. Molina Healthcare. That's a nice little breakout. Very nice little breakout. Bouncing off here. One breakout, bouncing off. Now above the 150. That looks pretty good. Interesting. Don't know anything about these guys, to be honest with you, but the breakout is decent, at least. A little bit low volume. But yeah, that's the way I'd look at that. So just, yeah, that's basically what I'm seeing. Okay, it's time for random stocks, apparently. VIAVI solution. What the heck is that? No idea. Never seen it before in my life. It's not quite as positive because it's bouncing off the 200-day here. Can you see that? A white line there, bouncing off there, bouncing off it again. So it's still consolidating, but it is yet to be a breakout. So you've got some sort of upward momentum here, but not going anywhere. Do you invest in African companies? I can't say I do. No, I don't. No, nothing against them, but just haven't come across one that I really want to own. I'm sure there are some, probably particularly in the consumer stock sector, there are probably some good ones. But I'm sure, some of my stocks have exposure to the market, but no, nothing particular. Leon, you're very kind. Thank you. Yeah, sort of, still feeling a bit weird, really, but you gotta keep going. Oracle, beautiful, shiny, bouncy rally. Like, this is a textbook thing, right? So you look at this, you break out of that resistance here, massive gap up on massive volume, you keep going, beautiful buy signal basically here in 9th of September. So exactly the sort of stuff that we look for. We're going to do live trading against the payout after the Fed. So I'm just going to wait out the Fed, probably wait out an extra day because most of Wall Street isn't that smart. It takes them about 24 hours to have it explained to them what just happened, and then we'll do a bit more. I've got literally 1 or 2 trades open or something at the moment. Very, very little. Just sit on my hands. And there are moments when you want to do a lot. There are moments when you do very little. I think this is the one moment to do very, very little. Why is Lily LLY tanking today? I don't know, maybe ate too much. Well, is it tanking? It's down 1.5 percentage points. I don't think that's really a great deal here, to be honest. The more important thing would be, let's bounce off the 50-day here again. That's sort of 896. Let's do that. And then that would actually be quite positive. And what you're then going to want to start to look at is taking out these highs up here. So 961, 970. That's kind of going to be the next resistance. So it doesn't look like a bad chart to me here, just down a few percent. Use tax-free ISAs when buying stocks. If I were English or British or a UK taxpayer, I probably would, but I'm thankfully not, so I don't. So let's have a quick look at some of our favorite tech stocks here, see how they're doing this morning. Palantir is flat. SoFi is up 1.4%. That's actually quite a nice little breakout there. Was that a gap up in the end? Yeah, just about little mini gap up there. That looks quite optimistic. So take out this here, and we're talking. I think there might be a case for that if the rate cuts come in big tomorrow. Tesla is 2.5 percentage points up, but still very much here at the same highs that we've been at since early September. So not quite enough to really give us some oomph here. Drew, you're super kind. Yeah, it really is. Losing one of your pets is really dreadful. It really is. And that one was my first pet ever, little tiger lily, and so yeah, it really does get you. It gets you a lot. Also, one of the reasons I haven't been trading, to be honest with you, I don't think my mind is 100% on. Is the Buffett indicator extremely elevated? Yeah, I think that indicator isn't that useful anymore for the reasons you mentioned there. Revenues outside of the US. I think, Netflix or something, I think 40% of revenue is non-US. So the size of the US economy isn't that important anymore. So I don't think in itself it's that useful. Plus, you got to look at how much more money has been pumped into the market by central banks around the world. So I think you kind of got to look at that, how much liquidity is out there. That's kind of the way why I would largely discount that, to be honest with you. So there we are. I'm still missing top of my head for some reason, and come and join me literally in 11 hours, and I'll teach you how we've done this little feat here, how we're up 93% so far this year in our teaching portfolio, and I'll break down the 3 rules for you. We'll do an actual trade together and everything else, and we'll have some fun, and you walk away with that knowledge completely free of charge. Just head over to felixfriends.org/bootcamp and grab yourself a seat. I thank you for watching. I thank you for tuning in. I wish you a beautiful day. If you're thinking of trading today, I would just say a big thing happening tomorrow at the Fed. Why not wait 24 hours? That's basically the way I would look at it. Actually, a little bit more. He talks at 2:30 p.m. tomorrow, so maybe give it 48 hours. Maria, you're very kind. Appreciate that. And I wish you a beautiful day. And I hope you join me tomorrow at